Alright guys, in this video I'm going to show you how you can make $1,000 per month on dividends. I guess the easiest ways you can do it, but also at the same time at the end of the video I will explain risks involved with this, as there are risks with anything you invest in the stock market. Anything you trade, as you can buy as many Apple shares as you want, there are still risks. Everything in the stock market has a risk. Nothing is 100% guaranteed. With that being said, guys, do not copy everything I say. Do your due diligence. I have been investing for over 10 years, right? And one of the first things that I wanted to do as a young investor was to find a way how I can make $1,000 per month, because $1,000 a month would be an amazing income. And so in the beginning of when I started trading over a decade ago, YouTube existed. I was looking at videos or reading online back then at blogs and so on, and there were many, that would say $1,000 per month, $3,000 per month, even now all over the place, right? I'm not going to name anybody because I am not the type of person who criticizes people, right? But I'm just going to say it in general. It's hard. And what I found out back then when I was looking into this, that it is incredibly hard, because you would need a huge amount of investment. Just recently there was a video that came out on YouTube. Like I said, I'm not going to say who it is. The person was talking about 5 stocks that give him, each stock gives him $3,000 per month in dividends, which I don't know. Okay, fine. But one of the stocks that they mentioned was Kroger. The other stock they mentioned was Home Depot. All right, let's look at it real quick. If you were to invest in Kroger, the amount needed for you to get $1,000 per month in dividends, you would have to spend $168,000 at the current price of the share price that Kroger is trading. I think it's $48.95, somewhere around there, right? $168,000. Who has 168? Now you can say, hey Mike, we can do this over the next 10-15 years. Buy this dividend stock, buy that dividend stock, accumulate, reinvest dividends. 10 years later, we'll get there. Yes, and that would be very smart. That would be very wise if you're a young investor. Fine, but they make these things look like people can do it now, right? Or that person also mentioned Home Depot. In fact, they said last week they bought Home Depot and now they're making over $3,000 in dividends monthly. Home Depot pays on a quarterly. They don't pay monthly. They pay every 3 months. But if you wanted to make $1,000 in dividend income from Home Depot, guys, you would have to spend $496,000 to buy 1,500 shares at the current price of $331. I mean, there's got to be a much cheaper way to do this, right? Instead of, who's got $500,000? Who's got $200,000 to spend, right? But what if you can do it with 17,000 US dollars? Anything less than 17,000, I don't know. It's going to get with, it would come with way more risks and it would be even harder. But with 17,000 bucks as an initial investment, you can make $1,000 in dividends. Now, the stock market, like I said, is not something that is super easy and just hands out money for free. If you're going to go the route of, let me pay, put a $17,000 investment and I'll make $1,000 per month, like I said, there's going to be more risk. And let's get into this. What is this that I'm talking about? And I'll show you the dividends, how much it pays per month, how it works, how it all started, how in my Discord it's been the talk since it even started going public, even before it went public, and a lot of other things. All right, so guys, screenshot from my Discord. Back on April 10, 2023, one of the Discord members said, guys, opinions on TSLY, right? At which I responded, and so that was like the first initial conversation in my Discord about TSLY, TSLY. And I said TSLY is synthetic covered call strategy on Tesla within the ETF wrapper, and it can be an effective way to play high volatility and sideways price action of Tesla. The whole sideways price action of Tesla and how that is in very much important to how you invest TSLY and the risks involved. I'll tell you that at the end of the video and it will all make sense. Since then though, the person that has pretty much taken over the whole TSLY conversation on my Discord and has become a champ and an expert at it is Auntie PC. And I'll mention something she mentioned about how we can go about trading that later in the video. So according to the issuer, the YieldMax Tesla Option Income Strategy ETF, guys, is an actively managed fund that seeks to generate monthly income by writing call options on Tesla. TSLY pursues a strategy that aims to harvest compelling yields while retaining cap participation in the price gains of Tesla, which means if Tesla explodes a lot, don't expect TSLY to do the same. TSLY is trading at $14.97, right? So if you wanted to buy 1,000 shares of this, you can buy it for 15,000 US dollars. And there you have it. With 15,000 bucks, you get 1,000 shares of TSLY that pays a monthly dividend every single month. Does it pay $1 every single month? Because then that would give you $1,000 per month in dividends, right? Well, it varies. Now, this is very remarkable. TSLY has a dividend yield of 66.56% right now. So far year to date, that's the dividend yield. That pretty much comes out to $9.96, almost 10 bucks annual dividend. And you might say $10 annual dividend, Mike, I'm confused. Yeah, but it's monthly. So it almost gives you $1 every single month per share. If you had spent $15,000 at the current price that it is now, you get 1,000 shares. That's almost $1,000 per month. And here we can look at the dividend history of the stocks. In January, it paid nearly $1. It paid 0.9986 per share. In February, it paid 90 cents. And then it went to 90, 82 cents, 44 cents in May, because obviously Tesla didn't perform well as a stock either. Then we go to June at 80 cents, July at $1.06, and on August 83 cents. What would that come out if you had 1,000 shares from the beginning? Well, these are the amounts. $998 on January is what your dividends would be. On February, you get paid $902, and so on. $920, $828. Like I said, May was a bad month, $440, then it goes to $800, then it goes to $1,066, and then $830. So basically almost $1,000 per month. So overall, let me just conclude this real quick before we get to the risk factor. You have an actively managed ETF called TSLY, right? The ticker symbol was TSLY. And this pays every month anywhere from 80 cents to over $1, 99 cents. And on a really bad time, when the Tesla stock itself is bad, then Tesla is also not performing well with its call options and put options and so on, then you get 44 cents. That's something people can say, okay, this is much easier of a target for me to get $1,000 per share on dividends than all these other stocks people are mentioning where I would have to spend $200,000, $500,000, let's say, right? So it is much, much easier to do that, and obviously relatively faster to accumulate TSLY shares, enough of them to get $1,000 per month in dividends. But there are risks involved with this, just as there are risks with anything else that you would do to get dividends, right? And I'm not going to mention the other risks for other stocks and so on. That's a whole different video. But Tesla as a stock, because like we said, Tesla is dependent on Tesla. Tesla itself has a PE ratio right now of 68.74. You're going to say, who cares? Forward PE ratio, 63.74. You might say, who cares? Look, is Tesla a tech stock? If it was a tech stock purely, then that PE ratio of 68.74 should scare you. But again, it could be a tech stock that has a lot of potential for sure in the future, then that PE ratio would be justified. When it comes to Tesla as a stock itself, though, to be honest, I find it hard to evaluate, to give it a good valuation, or say the PE ratio is right or wrong at any given moment, because Tesla itself is not just a tech stock. It's not just a car manufacturing company. Tesla is involved in artificial intelligence and a whole lot of other things. It's very hard to put a valuation on Tesla, sort of like Palantir in my opinion. But if you look at every other metric on Tesla, it's bad. And where is Tesla trading right now the past 5 years? Well, it's at $242, and you can see it right here, right? If we look at it on a purely valuation standpoint, then Tesla right now is overvalued. And getting into TSLY at this price would not make sense. Because if Tesla goes down big time, TSLY is going to get hammered. TSLY is best and works best when Tesla goes sideways, or if Tesla goes upwards on a consistent nice way. If Tesla is explosive on the upward side, which it has done many times because of volatile stock, Tesla won't see all those gains. There's a cap to the gains it sees from Tesla going up really fast. AI models are showing right now that within the next 3 months, Tesla is going to go up to $297, right? So that's what AI says. It's going to go up to 297. If that's right, and it goes the way it shows here, it's not going volatile. It's going on a nice consistent way, right? For the next 3 months. Then for the next 3 months, Tesla is going to make a whole lot of sense to be holding starting now. All right, so the risk, the ultimate risk, so we can now sort of put this all together. All right, the risk with Tesla is pretty much more if Tesla were to drop 15% or more in a very fast, volatile way, right? That's the risk. What do I mean by that? Well, if Tesla were to drop, like I said, more than 50% in a pretty much kind of fast way, Tesla will be forced to tap into collateral to fund the losses. Under extremely volatile periods, the collateral requirements tend to increase, thus reducing further the potential of Tesla to recover. And this happened this year when Tesla had dropped a lot. I think it was at $110, and now it has recovered. Well, Tesla used to be 2021. It's now at $15, so it has had a hard time to recover, right, as a share price, whereas Tesla did the opposite this year and has gone up a lot. So during sell-offs on the Tesla stock, not Tesla, but during sell-offs on the regular Tesla stock, put premiums tend to rise, implying that Tesla would have to not only dip into collateral, but also pay extra for setting up synthetic position. So what the heck is going on here, Mike? Why did you're confusing us. What are you saying? What's the point? The point is this, that if you were to make $1,000 per month on a dividend, and you wanted to do that from dividends, $1,000 per month, guys, if you want to go it the other way of, buying the regular dividend stocks and so on, or exchange traded funds, high yield dividend exchange traded funds, so on, you're going to have to smack a lot of money. You're going to have to break the bank and do that. Or you can do it through 10 or 15 year period, accumulating and cutting down also on your personal life on costs and so on. That's one way, right? If you want to do it even faster, then Tesla might make sense. There's also Apply, APLY for Apple. But Tesla might make sense. The thing though is with Tesla, it's not proper to get into it blindly, right? And say, well, it's at $15 now, let me get in. What you should know is this overall. Tesla pays incredible dividends. With Tesla, you can make $1,000 per month on dividends alone, have a great passive income by investing a whole lot less than on Home Depot and so on. Getting into Tesla, as Auntie pointed out in the Discord, it makes more sense on good dips. Don't just buy blindly. Don't buy today. Don't buy tomorrow. Just like that. Look at the Tesla stock itself. Follow the news. See what's going on. If Tesla takes a nice big dive, then on the dive, get into Tesla. If also you do your due diligence and you come to the conclusion that after that dive, Tesla is going sideways or upwards. As with that being said, I hope that this video was helpful. I was trying to find a way to let people know that, hey, you want to make $1,000 per month, it's going to cost you this much, or if you want it to cost a lot less, then there's this option, but there's also this risk and so on.
Are you looking for a Discord platform that offers a first-class trading community? That's what you can expect when you join Bull Market Watch. Trading can be challenging for some people, but we're here to simplify the process for you. We have a very powerful track record. Our Discord deals with day trades, swing trades, and long-term trades. Hundreds of traders operate through our Discord, where we come up with stocks to trade for profits on the NASDAQ and NYSE. With a low monthly subscription of $9.90, you will have full access to our Discord, where you can interact with other traders and get all the latest news when it comes to trading as well. It's a community that is extremely supportive of one another and always willing to help each other out. Become a member of Bull Market Watch today and be on your way to a better financial situation.